Well, we had a roller coaster ride today on Wall Street. Many people think we've now seen capitulation because the markets were down big this morning. In fact, at one time, the Dow was down a little over 1,100 points. Other indexes, percentage-wise, were down even more. In fact, as of this morning, the NASDAQ was off to its worst annual start since 2008. And of course, we all know how 2008 turned out. We had a financial crisis, the market crashed, and the Fed ended up slashing interest rates down to zero. Except right now, rates are already at zero, and the Fed is threatening to raise them, and the market is already tanking. And then we had a reversal. The Dow closed positive. All of the indexes managed to close positive on the day. The Dow was up just under 100 points, 99 points. So a big rally off the low. I think about a 4.2%, if I'm getting that number right, off the low. A little bit of a bigger reversal in the S&P, rallied about 4.5% off its low. The NASDAQ had a 5.7% rally off the low. Russell 2000, almost as big a move, 5.3%. But where you saw the biggest reversals was in the most beaten down sectors. Look at the Cathie Wood ARK Innovation Fund. That made another new low for the move intraday, but then had a 13% rally to close positive. But it was down so much that even with that big rally, it was still barely up 3% on the day. The intraday low was just below 65, which means the fund was almost down 60% from its high. But the biggest reversal was in the Grayscale Bitcoin Trust, which is highly correlated with the ARK Innovation Fund. That trust rallied 17% from its low to close positive by 1.2%. That tells you how much the trust was down to have that bigger rally and barely be positive. In fact, the low was 22.22, which is about a 62% fall from last year's all-time record high. So a slightly bigger decline than the ARK Trust, but almost identical. I mean, these two are pretty much neck and neck, although they're still behind MicroStrategy, which got down to $319 earlier this morning before rallying back to cut its losses. It closed at $370.45, down 4.23%. But at the low, MicroStrategy was down just over 75% from its all-time high. Of course, that stock is not doing nearly as bad as Robinhood. Robinhood at this morning's low of $11.15 was down about 87% from its all-time high. It was getting obliterated in the morning, but it managed a 17% rally to end the day up just under 1%, actually 0.7% or something like that, but barely eked out a gain. But a lot of people, again, looking at these reversals, think that we've put in some type of significant low here because we opened lower and then rallied and closed higher. But to me, it wasn't that significant of a reversal. Sure, we closed positive, but we didn't take out any key overhead resistance. It really wasn't a big enough rally. And I think most capitulation type rallies, they make the low very early in the morning and then rally the entire day and close the day with very substantial gains. The markets today were down for most of the day. You only got the rally towards the end of the day, and it wasn't very impressive to me. I think that there was more short covering in these names than new buying. I don't think the markets are out of the woods by a long shot. I think we've got more work to go on the downside. Didn't look like capitulation to me. I think people are still holding and hoping, rationalizing, and I think that's particularly true in the cryptocurrencies. Bitcoin, again, huge reversal intraday. Bitcoin traded below 33,000 was the low this morning, and as I am recording this podcast after the close on Monday, we're just below 37,000. That's about a 12% rally off the low. But again, if you look at a chart, this is all a bunch of noise. We're still well below the neckline of the Head and Shoulders top, and we still haven't even hit the $30,000 level, which I think is pretty much a sure thing that we're going to see that potentially much lower, but that's where the real support is. And to me, looking at this chart, there's no way we're not going to at least test that support. Personally, I don't think it's going to hold, but if we're going to hold anywhere, it's going to be around 30,000, most likely closer to 29,000. We'll probably have to take out some stops that are likely below 30,000. So I think if we're going to get a bigger bounce in Bitcoin, it's going to come from a lower level than the 33,000 that we traded this morning. But I think one of the things that is engendering some of this hope is the idea that Powell is going to pivot, that he's going to walk back the rate hikes or the number of rate hikes. He's going to push against the market expectations that the Fed is going to be more hawkish. Maybe he's even going to walk back some of the rhetoric regarding quantitative tightening, because we're getting the FOMC meeting tomorrow is the beginning. It's a 2-day meeting. So we're going to have to wait until Wednesday to actually get it right from the horse's mouth when it comes to what the Fed intends to do with rates. But we did get some economic data earlier this morning that may have given some investors hope that we will get some type of pivot on Wednesday when we get the official announcement. We got the Chicago Fed National Activity Index for December, and the expectation was for a positive 0.25, and that would have followed a 0.37 in November. Well, they actually revised November's up to 0.44, but then we got a negative 0.15 for December. So not only a negative number, and a surprise at that because it was well below consensus, but it's an even bigger decline from the previous month. So the economy is rapidly decelerating, and the news was even worse with the January PMI. That's a January number, so it's even more recent. The consensus was for the composite index to come out at 56.7, and instead it came out at 50.8. That is barely above expansion. If you're below 50, you're contracting. The range of estimates was 55.5 to 56.9. So we're skirting along the edge of recession territory. The same thing when you strip out the service index. That was supposed to come in at 55. It came in at 50.9. Again, way below the range of estimates and barely above expansion territory. The manufacturing index, surprisingly enough, was the strongest, still below estimates. They were expecting 57, and we got 55. But these numbers are coming down. These are some of the worst numbers we've seen since the beginning of the pandemic. And to me, it looks like the evidence is really mounting that we are headed into recession. In fact, I think the economy started to weaken even before Powell started to get tougher on inflation by indicating that they would be less dovish when it comes to lift off on interest rates, how soon they would raise rates, how many times they would raise rates, what they might do with the balance sheet. I think all this talk really started after the economy started to roll over. And so by the time the Fed actually gets around to lift off in March and hiking rates, we could certainly be in a recession. In fact, Q1 could be the first quarter of the recession. And this is really uncharted territory for the Fed, that it would actually begin a tightening campaign just at the onset of a recession, because clearly this is going to exacerbate the severity of the recession, because the Fed would be doing the opposite of what it typically does in a recession, which is stimulate the economy, lower interest rates, print more money. They are threatening to do the opposite of that. The economy is weakening, and they're going to put nails in the coffin by raising rates and tightening up on policy. And in fact, if the process of the economy weakening and headed into recession, if that dynamic was already in place before Powell became less dovish and before the market started to crash, think about how much worse the situation is going to be considering what's happening in the markets, because now you have the reverse wealth effect to consider.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.